Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, July 17th, and I sure didn't see any of this coming. Just kidding, I think we were all pretty ready after seeing all-time high after all-time high, day after day, to see some kind of pullback. And this morning, we did open with a gap down in SPY. And let me actually get that gap in here. There you go. So with that gap down, we gapped underneath the gap from Tuesday, and that created an island top reversal. That is a very strong reversal pattern. So the space where those two gaps overlap definitely needs to be on your radar, could definitely be a strong resistance level. And the first thing that you should have noticed when we did open with that big gap down is that the 35 EMA immediately tilted down. The momentum has shifted. It was a big enough drop to turn that 35 EMA completely. And from there, we sold off. We actually opened completely outside of the implied move. We never touched the implied move today, and the move was big enough to have that momentum push us even lower into the next gap. The next level that we have is the gap from last week from PPI. So we did have that hot PPI that was last Friday, and we gapped up and then rallied for a few more days. So we did get into that gap, and as soon as we hit the bottom of that gap, that was our low of the day. So we did close out that PPI gap, and we didn't close very high above that level. So as far as it being a support level, we did bounce, but it didn't give us a whole lot of a boost. So big down day today in SPY. SPY did close down 1.4%. VIX closed up 9.64%. We are back in the 14s for volatility, which is really good. Day trading is a lot more fun with volatility, and we did not close within the implied move today. We didn't even touch the implied move at all. So that was SPY. QQQ had an even deeper red day. We opened with a massive gap down, and we got not only outside of the implied move, but completely outside of the trading range today. And here also we saw that 35 EMA, huge tilt down. That momentum definitely defined our day. So we opened with that big gap down and sold off all the way down to the 1 hour 200 moving average. So in last night's video, I did mention that we were definitely due for a tap with the 30-minute 200 moving average. This morning we gapped completely under it. And if you take a look at that 35 EMA at the end of the day, it actually crossed underneath the 30-minute 200 moving average. That is a fully bearish signal. So in SPY, I didn't mention, let me quickly switch back. So right here, we still have the 35 EMA trading above the 30-minute 200 moving average. And we did have a bearish day, but this setup is neutral. It's not bullish. It's not quite bearish yet. But in QQQ, we did have our first true bear signal. So with tech selling off and lost the 30-minute time frame, we have that bear signal, and we are officially bearish on the 30-minute time frame. So if we do swing up, if we see a bounce on this 1 hour 200 moving average, then 35 EMA, of course, should be on your radar, but also the 30-minute 200 moving average as resistance. And also note that we did close underneath the 1 hour 200 moving average. All right, so QQQ closed a giant 2.94%, and that is a pretty big move considering VXN is at 20. That's more of a 25 level volatility, and VXN up 11.5%, and we did not even touch the implied move today. Clearly, options did not see this coming. All right, and then switching over to SPX, we did open with that same gap down, and we gapped completely outside of the trading range, not just the bottom of the implied move, but the whole trading range. So we gapped underneath the 35 EMA. We did see that shift in momentum when we turned that moving average, and we sold off. We got into the next level underneath the trading range, which was the up gap from PPI last Friday. And as soon as we filled that level, you could see the wick right here. We did bounce back up, but we did close just a little bit above the lows of the day. So we didn't get a huge boost from filling that gap, but we did close above that. So SPX did close down 1.39%. VIX again up 9.62%. And we did not close within the implied move. And then switching over to IWM, this is the only one that closed within its implied move. And we did open today with a swing up, and right at the bottom of that bear gap, you could see the wick. It's a little bit hard to see on my screen, but the wick comes up to just underneath that bear gap. So just knowing where that bear gap was gave you an advantage if you did want to maybe sell call spreads or calls, or however you chose to play that. So we did get rejected at the bottom of the bear gap. That bear gap goes back to right here. That is actually November of 2021. We did see that down gap right here, and then it was resistance right here, and then it was resistance today. And then from there, we did actually close the most bullish of the four. We did close above the 35 EMA. So all things considered, after that huge rally that we saw, we just pulled back a little bit, and we're still looking bullish here in IWM. So IWM closed down 1.05%. The Russell Volatility Index, RVX, closed down 0.13%. And we did close within the implied move here. So, all right, so that was a recap of today. Let's go check out tomorrow's levels. Alright, so I don't know if you guys could tell, but in the first half of the video, I was having audio and video issues again. I'm pretty sure I fixed it now, but man, I lost so much great content for tonight. I'll try and remember the parts that I lost and integrate it in the second half. And before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and if you love that I break it down every night, then please make sure to give this video a like. And also don't forget to subscribe and turn on notifications. And don't be afraid to use the thank you button in proportion to how much I have helped you understand the market. Definitely not necessary, but it's an easy way to show appreciation. All right, so starting in SPY, tomorrow's implied move is between 552 and 561, and that is from options. And the 30-day average volatility is a little bit wider, 551 to 562, so about $1 wider in each direction. And then the implied move on Friday's contract is between 551 and 563. So the implied move on Friday's contract is actually wider than the 30-day average volatility, which is rare. Not rare in a market that has volatility, but we just haven't seen it lately. So to the upside, the first level to look for is going to be this 35 EMA. It is above us, and we did get that momentum shift today. It is pointing down, so as soon as we swing up, keep an eye on how we react to this level. We might slow down and see if we see it as resistance or break out. And if we do get above it, then the top of the implied move is at 561. And we also have just underneath the bottom of the implied move, we have that bottom of that down gap from this morning. And that is at 560 and a quarter. And then above that, we also have 563. That is the top of the implied move for Friday's contract. And then the top of that gap is at 564. That is outside of tomorrow's trading range. And then we also have all-time highs. That is 565.16. And that also outside of tomorrow's trading range, but just be aware of where we are. And then to the downside, we do have a small support right here. And this is right after CPI where we dropped. That level is at just under 556. Underneath that, we do have the 30-minute 200 moving average at the bottom of the implied move, and the momentum there is still facing up. If we do hit that level, then it is likely that we either slow down or bounce and then reevaluate from there, unless tech keeps selling off really hard, and maybe that might get us underneath and then possibly closer to the 1 hour 200 moving average. That's definitely an extreme scenario, but it is possible. So as of right now, I would expect a bounce at the 30-minute 200 moving average. And unless we see VIX really green, or unless we see really high volume, then maybe I would reevaluate there. But so far, that is where my head is at. And then that is SPY. Switching over to QQQ, we do have an implied move over here between, let me zoom in a little closer or get this realigned here. So 476 is the bottom of the implied move, and 488 is the top for tomorrow. The 30-day average volatility is actually exactly the same. It was off by a few pennies, but it's 476 to 488. And on Friday's contract, the implied move is between 474 and 490. And to the upside, we do have the 1 hour 200 moving average. We did close just underneath it. Right now, NQ futures are green, up about 0.25%. So if we do open at that level, then we will open above the 1 hour 200 moving average. We did close oversold on the day, and that in itself could give us a technical bounce at this level. So if we do get above it, then the next level to look for is going to be this 35 EMA. This is the 35 EMA from the 30-minute time frame, and it did today cross underneath the 30-minute 200 moving average. That is a bearish signal, so definitely look to see if the 35 EMA acts as a resistance, and same goes for the 30-minute 200 moving average. And as long as that 35 EMA is trading underneath the 30-minute 200 moving average, we are technically bearish. So top of the implied move at 488, top of the implied move for Friday's contract, 490. So then again, we have that 30-minute 200 moving average above us, and then that down gap from today. It's a pretty big down gap. It basically took the entire bottom of the trading range. So that is a $7 wide gap, 1.5%. So really big gap. That one is no joke right there. So that is the upside. And then if we do see this as a resistance level, the 1 hour 200 moving average, then 476 is the bottom of the implied move. 474 is the bottom of the implied move on Friday. And then zooming out just a little bit, the next level underneath the trading range is going to be this up gap right here. This is from June 11th going into June 12th. I actually don't have this labeled, so I don't know what this gap is from, but I will look back and see it, maybe if I have it on some of the other charts, or maybe I'll have to go back and look at the video. But that this gap right here, the bottom of that gap is 467, top of that gap is 471, and right around that level as well, we have the 50-day moving average, which we are severely overdue to meet up with. So 50-day moving average, and I haven't readjusted the 50-day moving average in a little while, so it could be maybe tilted up a little bit or a little off, but pull that up on your own chart and see where the 50-day moving average is. And by tomorrow, I will have that fixed. So that is QQQ. One more thing before I switch to SPX that I am seeing is a support level right here. So right here and right here is where we did see two prior supports. This one is within the implied move for tomorrow, so that's 477. And the other one is just outside of the trading range, almost near the bottom of Friday's implied move, but that is at 474 right here. So two supports that you might just want to be aware of if we do drop tomorrow. All right, and then switching over to SPX, the implied move over here is between, let me get realigned, 55.50 and 56.30. That is from options. The 30-day average volatility is a little bit wider, 55.40 to 56.35. And the implied move on Friday's contract, 55.35 to 56.40. If you feel more comfortable trading 1 day out instead of 0 DTE. And to the upside, we do have that 35 EMA. 35 EMA typically acts like a magnet, so if we do get pulled up to that, it's a level that we probably will be testing tomorrow at some point, whether it be further out in the day or right away, but that level is the first level to look for, and if we get above it, then the top of the implied move is 56.30, and then that also has the bottom of the down gap from yesterday's move, and that is around 56.20. Let's call it 56.25. So bottom of the gap here. So then if we get above the 35 EMA, the top of the gap is 56.67. I worded that kind of funny. This is not in tomorrow's trading range, but the top is right here just underneath all-time highs. And I left a few numbers up here from today, and so all-time highs is where we closed yesterday, just underneath all-time highs. So when we gap down, the top of that gap is right at all-time highs. Now remember, the top of a down gap acts as a resistance, so with the top of that gap being right there at all-time highs, if we do find ourselves up here, definitely consider it as a resistance. There's probably going to be some selling pressure at that level. To the downside, we do have this gap right here, and that is from last week. This is where Jerome Powell was speaking in front of the House, and this is the first day. We did fill in that second gap, and the bottom of that gap is at 55.72. Underneath that, we do have the 30-minute 200 moving average. I did mention yesterday we're overdue to hit that level in a big way. We don't have to hit it, but it is time in my opinion. And the way we can meet back up with that level, we can either drop to it or consolidate through time. So right here after that drop, we might stay sideways and wait for the 30-minute 200 moving average to catch up. And if we do drop and then break that level, then the bottom of the implied move is at 55.50. The bottom of the implied move on Friday's contract is 55.35. And then underneath all of it, we have the 1 hour 200 moving average. So that is tomorrow's trading range in SPX. And then IWM, we do have an implied move over here between 218 and 226. That is from options. The 30-day average volatility is a bit wider, 216 to 228, so $2 wider in each direction. And then the implied move on Friday's contract is between 217 and 225. And to the upside, the first level to look for is right about the top of the implied move, 226, and that also lines up with where we did get pushed down. There is a little bit of a wick above that, but right here is where we see the top of the bodies of the candles. That's at just under 226, and then we do have that bear gap right above us, and it is actually the bottom of that bear gap is right lined with Friday's top of the implied move, so 227, just a little bit underneath 227. Then the top of that bear gap is 228.71, so 229. Very often when we fill a bear gap, the top of that gap is where we see resistance. So just know where the top of that gap is. This is a long time resistance. It goes back to 2021. So just underneath all-time highs. Let me actually zoom out and see where we have all-time highs. We did make all-time highs right here. This is November of 2021. And then this is still November. So in November, you can see it on the 1 day time frame. You can't see it on the weekly candle. You can't see it there. But if you take it to the daily time frame, you'll see where this gap is. And we did see a gap down, and then we saw that as resistance right here. So that is just underneath where we closed, and the top of that gap is just under 430. Bottom of that gap, 227. So just be aware that that is there. So that is the upside of IWM, and then to the downside, 35 EMA. We are still very bullish here with that close. We did pull back, but we still closed above the 35 EMA. Momentum is pointing down for the day, but keep an eye here. We definitely look like we could see oversold conditions on this time frame. and that should line up right with that 35 EMA. So that'll definitely likely be the first level to look for. And if we do break that level, then we do have the up gap. This is from Monday going into Tuesday. Bottom of that gap lines up with the bottom of the implied move for Friday. So it's right around 217. Bottom of the implied move for tomorrow is 218. And then just to add one more level to look for, if we do start correcting from this big move, then we do have an up gap from, this is Friday going into Monday, and then the bottom of that gap is at 213.73. So we can round that up to 214. So there you have it. That is IWM, still bullish. So don't be surprised if we try and make one more run to take out this bear gap. And also don't be surprised if we swing up at it if we see some selling at that level. We are trading quite far away from the 30-minute 200 moving average. So on this time frame, we could use a bit of a correction. And if not, if we do consolidate through time instead, then we may see some flat days, trade sideways, maybe underneath this bear gap while we're waiting for this 30-minute 200 moving average to catch up. And something in the first half of the video that I'm pretty sure got erased when I was having those technical difficulties is that I am considering starting to also track the Dow. So DIA, if anybody trades that, let me know. Let me know what you guys think about that. I think I'm going to do it just because I've never tracked the Dow, and at this point I'm doing all the other indices. Why keep the Dow out of it? And it might also give us some more clues on how to better trade. For me, SPX, and for you guys, whatever you trade. So let me know what you guys think about that. Have fun tomorrow. Trade safe. Make sure you're taking profits when you're up.